Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Yes, I say that all the time, and I still messed it up. But anyways, we do this one time only live. So let's welcome Greg Dickerson to the show. How you doing, buddy?
Doing great, Michael. Good to see you.
Nice to see you as well. Thank you for being back every Monday. You are one of my original experts. We've been doing this now seemingly, I think, almost 2 years together. So thank you very much for that.
The OGE.
Yeah, that's right. That just means we're old, man. That's all that means. you and me together. Hey, I don't know if you saw this. I'm sure it crossed your radar at some level, but Zillow has exited the flipping business. They are going no longer going to be an iBuyer. And as expected, there are lots of channels out there talking about this is the sign, this is the canary in the coal mine. The real estate market is over. Get out. Disaster coming. And I just wanted to ask you what you thought. Do you have any opinions on it?
Yeah. A lot of people are still calling for a housing market crash. And, Zillow was never profitable with their home buying program. And, I think one of their issues obviously is their valuations. Everybody knows, or most people should know that, the Zillow Zestimate, as people call it. I mean, it's pretty meaningless. It's very inaccurate in most areas. I mean, there might be some areas of the country where, they're relatively close, but for the most part, they're very inaccurate because it just takes an average of everything within a radius, and you could have any number of values within a radius. So I think number one, that was their biggest problem, was they were just overpaying for houses. They, went on a spree and just bought too many of them. And, I read a story the other day where somebody said, hey, I sold my house to Zillow for $850,000 last year. They called me back, asked me if I wanted to buy it back, and I just bought it back for $550. So, they're trying to dump and unload, but, they were trying to own and be the one-stop shop for anything and everything real estate. So that was Zillow's plan and program. And, they took their eye off the ball in terms of what they really are, which is, a resource for retail customers to find real estate, to do for sale by owners, rent, things like that. And then sell leads to real estate agents. I mean, that's what their business is. That's what their business model is. They own real estate search.
Yeah.
So they took their eye off that ball. It'd be the equivalent of Google, abandoning search and trying to go, buy every internet company out there and try to own everything and be a one-stop shop for everything internet. It just doesn't make any sense. But that's really what happened. It's not that it's an unprofitable business. They just didn't do it the right way. I mean, Open Door's making money at it. There's other companies, iBuyers that are making money. And the key is, buying and valuing the properties correctly. And, at the end of the day, that's where they messed up.
Yeah, I've done a lot of reading on this here recently. I think they broke Cardinal Rule number one. And that, of course, is you make your money when you buy. When you flat out overpay, it's hard to recover from that. And, they actually had an internal code name called Project Ketchup, right? Like mayonnaise, mustard, ketchup, because they wanted to catch Open Door. Right. So they actually not only took the eye off the ball, as you're saying, but then they had the wrong metric. They were rewarding teams on margin or on market share. This is like the .com companies trying to make up losses on volume. Right. So they just started. They were already unprofitable. And you can go back and look at their earnings announcements from years ago or a year ago. And then they stepped on the gas and they got more unprofitable. So it was, never break rule number one. And again, the other thing I think is pretty obvious is Zillow, they had a lot of cash and they thought cash would fix it, right? So they're going to go down as the worst flippers ever. They're going to lose somewhere between $500 and $700 million flipping homes.
Yeah, but it doesn't matter. In this economy and this market right now, they can just go sell debt to Wall Street, sell more shares of stock and raise all kinds of money and nobody cares, because stock go up, price go up, everything.
Yeah. So let's talk about that. Cause again, I think I have no problem. I was in tech. I tried to launch products all the time for many years. Some worked, some didn't. I don't mind taking the risk. I actually think the CEO of Zillow is making a strategic mistake on the exit. And as an entrepreneur yourself, as someone who built a 9-figure business, I wanted to ask you. So, okay, he's sitting here. He's now the 8, 12, 15 most powerful people at Zillow in a room, and they've now recognized they're not good at flipping homes. Fine. Then they look at the inventory of homes they already own. It's 18,000 deep. So it's bigger than was initially reported. And now the CEO comes out, and I'm sure it's him, and says, I want these off my books. I don't want to be in this business, blah, blah, blah. Make it go away in Q4, which is the quarter we're in now. I think that is short-sighted. I think that only guarantees losses. And where I'm going with this, Greg, is I think there was a better way out. They could have just become instantly one of the largest landlords for single family homes, or B, and probably more likely, because again, that they took the eye off the ball, they could have partnered with American Homes or Invitation Homes or whatever there are and become, a 50-50, 51-49 partner in a portfolio of rentals. That would have been a better way to exit, because one cure for overpaying is holding. What do you think?
Yeah, but again, they didn't make it on the buy. How are they going to all of a sudden turn into an efficient property management company? So,
Yeah.
the internal discussions were probably, the carrying costs were eating them alive. It's one thing to buy the property and overpay. Values may have caught up to a point, depending on when their last acquisition was, because, real estate's been going up 20-30% a year. So it depends on where they purchase these properties, but the market is slowing down. The big thing they saw was the market's slowing down. We're not going to see much more upside on these properties, and their carrying costs between taxes, insurance, and maintenance, was really costing them. I just don't understand what their model was, because they could have immediately flipped these properties that they bought, because their whole thing was to be a one-stop shop. So instead of you having to go through a real estate broker, this, that, and the other, you could just sell your house to Zillow, go buy another house somewhere else. I don't know why they didn't just put these houses back on the market. That's what I don't know. That's what I don't understand, and what I'm not understanding, what their business model was behind that. And, they are trying to unload these, in bulk to some of the, rental property hedge funds out there that are buying, properties in bulk and things like that. So,
Yeah.
are they going to actually take a loss? What's it going to look like at the end of the day? I don't know. But for them to just all of a sudden, they couldn't get it right buying them, to all of a sudden switch to managing them. No, that would have been a nightmare for
Another
them.
nightmare. Yeah. Okay. That makes total sense. And yeah, last Thursday, I believe it was reported, they've already organized a sale of 2,000 units. So yeah, they're going to just chunk them off and, flush it and get behind them. So very, very cool. So again, when people look at, so I guess the last thing to talk about here, is this a sign that the housing market's going to crash? It's all over, time to get out of the way, just because Zillow can't make money at it?
Yeah, the videos are out there again. Everybody's calling for a market crash. And again, right now, there's so much demand, pent up demand out there. I mean, we are seeing it slow down. Rates went up. We saw a pullback. Buyers are getting fatigued. So we're seeing some markets, are starting to, reach critical mass, and, they're getting pushback from buyers. Other markets, not so much. Some markets are still very competitive, and prices are still going up, and there's still a lot of demand. So, at the end of the day, it's supply and demand. Until the supply outpaces demand, not a whole lot's going to change. And the catalyst to that is, payments, interest rates, the ability to borrow money. If we have a a market accident, and, if some of these other things we're going to talk about happen, that's going to, put a problem, in the liquidity, and in the mortgage, markets, when the Fed stops buying mortgage-backed securities and things like that. When the credit markets tighten up a little bit, it's going to get a little harder to borrow money. There's going to be less of it available. So, that will impact demand. And then, there is, some areas where they say construction is oversupplying in certain markets, and we're going to reach that. I mean, in the past, it's always happened where we go through these periods. This is very unique and very different than any other period before, but we've gone through periods in the 70s, in the 80s and in the 90s, where we built too much, and we ended up,
Builders build, right?
demand.
Yeah.
Yeah.
Builders
And then,
build.
supply catches up and the market shifts. So, it's always been cycles, and it's always been 10 to 14 year cycles. We're right at that point, where, the pandemic was very unique, created a very unique, condition in the economy in a lot of ways. A lot of things are going to change forever moving forward. So it's very interesting times, and, nobody knows when or how or what, but if interest rates all of a sudden shoot up because of inflation, everything we see going on, if the Fed decides to finally actually do something, about inflation, the only thing they can do is raise rates and stop, pushing money into the economy. So when that happens, rates rise, people stop buying because payments go up. They're already stopping the refi, which puts more liquidity into the economy when people refinance their house, pull the cash out.
Sure.
And then it'll get harder to borrow money, because the banks will pull back, because less people will be qualified at these payment levels, debt to income, those things. So everything resets at that point. Depending on how fast that happens, that could create a crash. But generally, the way we're operating right now, we could probably work our way through it.
Yeah, I've been calling for a housing slowdown for, I don't know, the last 6 months or so. I see it in the data. Again, people just want it to be a crash. They just, I don't know whether they, I don't know. When I see all these crash videos, I don't, A, are they doing it for the clicks, right? They make a penny a video, maybe. B, do they want it to be a crash because they missed last time or they weren't ready? Or C, they want to see other people suffer because they haven't taken advantage of it. Why do you think everything has to be a crash versus a slowdown?
Clicks, man. It's all
Clicks. It's just
clickbait
that easy.
thumbnails. Yeah. I mean,
Okay.
that's what it is. It's for attention, right? So, they got to get people's attention, and, it's feeding on fear. It's like the media,
Okay.
you look at the headlines and you look at magazine covers, and, headlines of news, it's always doom and gloom. You look at magazine covers, it's all about, how to get this, how to get that, 3 steps to this, 7 tips for that, so it's just, it's just hooks and
Okay.
clickbait, but again, when you've laid it out, when you look at the history of housing, housing has always gone up. We've never seen housing prices really go backwards until when was the first one? Was it?
We saw 5 years in a row of negative growth. It was, I think it was 2007 to 2011. I think
that was it. So other than that, prices have gone up. So again, you have history to show you what will reverse prices and price action. It's an overheated housing market, and I think we'll see a correction. So there's a difference. Correction 10-20%, that's pretty healthy. Crash, what does that mean? Well, 0809 is the only example we have of a housing market crash. That's when values dipped 50% or more in some markets. The markets still did relatively well, and there's already markets that are seeing decline in pricing because we reach these unsustainable levels. Income to debt to income ratios really is what it's all about. At the end of the day, unless you're paying cash, it's a debt to income ratio.
Yeah, absolutely. It's all about, you couldn't have said it better. And again, I was in a market that fell 75% peak to trough, so I know what it's like. I know what it feels like. It's none of the signs are there, but this is very interesting. I do not see Zillow as the sign that I don't see Zillow as a sign that flipping is a bad business. They broke rule number 1. I don't see it as a sign as a bubble. I don't, if Zillow suddenly put all of their inventory on the market at the same millisecond across the board, it would be like 3 days of inventory in some markets.
Open Door is very profitable still. Their business model still works. I'm coaching people all over the country that are flipping houses, and they're making money and doing well, and at all different levels. And I mean, you still buy houses, so the model works. Again, you got to know your values, and it's all about knowing what to pay, and having an exit at the end of the day, and or cash flow, so that you can pay. Again, you can pay whatever you want as long as the property cash flows. But if you're straight up flipping, I think they forgot the other half of their business model. They were going to buy and sell. They just forgot to sell.
It just kept, it's pretty bad. So again, Greg, how can people find you, get part of your world? Because you put out a lot of amazing stuff.
Yeah, gregdickerson.com, all of my social media channels, YouTube podcasts, gregdickerson.com.
Yeah, do yourself a favor and follow him. He is a realist, or he is an entrepreneur through and through. He talks about a lot of things that I don't have experience, and thus I do not cover. So gregdickerson.com. Thanks, bud.